Welcome to the second episode of Season 4. As a reminder, the Spartan Journal podcast is meant to keep you up to date and informed about the ever-changing world. I'm your host, Shadi Khamis, joined by our executive editor,
Kaminski,
and our co-host,
Rhattigan.
Today, we will be evaluating AI taking the world by storm, a new type of spending called boy and girl math, and what to avoid when investing into ETFs. The date is October 19th, 2023, and you're listening to the Spartan Journal.
Here are this week's market evaluations. The S&P 500 is down 91.25 points and 2.1% this week, while the Dow Jones Industrial Average is down 419.41 points and 1.24%. And finally, the NASDAQ is down 403.12 points and 2.95% this week.
The Russell 2000 is down 10.64 points and 0.61% this week, while MSCI International is down 15.69 points this week, as well as 3.01%. Finally, Barclays Bond Index is down 0.21 points and 2.87% this week.
Here's our stock of the week, brought to you by the Wall Street Journal. It is ExxonMobil. They reported the oil giant paid $100 million to the exploration company Galvanic Energy for the 120,000-acre property, estimated to contain enough lithium to supply 50 million electric vehicles. This looks like a strong future for ExxonMobil.
Thank you, Alex and Liam, for the week's update. The conclusion of our brief market evaluation leads us into our informational discussion portion, which I will start from. Now picture this. Imagine using artificial intelligence to decode a 2,000-year-old unread scroll from the eruption of Mount Vesuvius. This is what a 21-year-old student, Luke Ferreter, did and won $40,000 in the process. Now for some background info, the scroll, representing a burnt log, is a part of a treasure trove discovered in the ancient Roman city of Herculaneum, possibly linked to Julius Caesar's family. Deciphering these scrolls seemed impossible for centuries due to their fragility, but Luke's AI identified the word porphyrius, meaning purple in ancient Greek, opening doors to decode the entire text. Even a tiny fragment of the text could transform our understanding of the ancient world, similar to the Renaissance impact on knowledge. To translate this effect into the business world, it's crazy how once thought impossible to read ancient texts can now be unlocked with cutting-edge technology. In the near future, and now, AI plays a crucial role in solving complex problems and can have exciting financial rewards. The Vesuvius Challenge highlights how financial incentives can actually stimulate research and development efforts. With that being said, let's look at this discovery to a broader scale. With discoveries like this, it is more likely possible to boost cultural tourism, creating economic opportunities for businesses and regions. Data analysis and interpretation are essential skills both in decoding ancient scrolls and in the modern business world. Intellectual property rights like patents can also be at play when innovative methods are used, presenting potential business opportunities. This blend of historical intrigue, modern technology, and the allure of significant financial rewards truly makes for a compelling story with a dash of adventure and business insight. Now, to open up this discussion, how do you guys think the use of AI will affect society in the future?
For me, I see AI everywhere. I'm a student, and in my experience, AI has only helped me. And AI is going to continue to grow. And for those basic jobs, I do feel they might go away because of how smart AI is getting. But for those jobs like financial planning, consulting, therapy, etc., these jobs will stay because those are heavily based on personal connections. Alex, what do you think?
On the business side of AI, I honestly think that AI will help a majority of financial analysts, whether they're on the stock market side or internal business side. They will be able to predict future economic occurrences with way more accuracy. And overall, this is going to be a positive effect for the business sector.
I appreciate you guys for the valuable insight, and special thanks to the Smithsonian Magazine for providing this source.
Thank you, Shadi, for your information. Now, here's an interesting topic that I have found. In this lighthearted article from the Wall Street Journal, Shadi Lieber explores a social phenomenon called girl math and its counterpart, boy math, which involves justifying discretionary spending through creative arithmetic. People sharing their quirky methods for rationalizing purchases and discussing them on social media. Some common rules of girl math and boy math include treating cash spending as not counting, rounding prices, considering savings as earnings, and believing that anything under $5 is essentially free. This kind of reasoning has gained popularity on social media, with people sharing their spending logic under playful hashtags. I honestly have recently been seeing this on my TikTok feed pretty often. It honestly does relate to me because now that I've just started college, I've been making these small purchases as though they're, next to nothing. Shadi, what do you think about this kind of spending?
Yeah, to bounce off what Alex said, I see several advertisements on my Instagram, and I never really think much of it. I just buy and don't really worry about the cost incurred, especially when it comes to food.
Thanks, Shadi. Now here's the rest of the article. The story mentions a New Zealand radio show that initiated a call-in segment called Girl Math, where women discuss their spending justifications. For instance, a woman justified buying an expensive hairdryer by factoring in the time saved and the money she saved on her hair products and doctor visits. The hashtag Girl Math has gained significant traction on TikTok with over 844 million views. There's also a trend of boy math highlighting the oversights men make in their spending calculations. Although the article humorously labels the spending logic as girl math and boy math, it highlights that such justifications are relatable and common among people of all genders, despite its humorous name. This spending rationale is a way for individuals to make sense of their purchases and indulge psychological discounting. It also shows how businesses often price their products just below certain thresholds to appeal to customers. Ultimately, the article suggests that this kind of dumb math, as one expert calls it, is a way for people to feel better about their spending decisions, especially when prices for various goods and services have been on the rise. It's a form of mental gymnastics that allows people to make purchases guilt-free. People are finding comfort in realizing that they're not the only ones engaging in this quirky form of arithmetic. So while this article is a relatively small topic, you can expand this to further than what it entails. Me personally, I'm very sure that people have been noticing how pricey big purchases are. Due to the current state of the economy, and since it's heading towards a mild recession right now, people are avoiding more risk and just sticking to the freebie type of purchases. Overall, Liam, what are your takeaways when it comes to boy and girl math?
This does not surprise me at all. I'm a college student and I tend to do this. Maybe it's because I've seen it, but boy math is probably just a way to feel better about buying something that you just truly want instead of need. And as humans, we don't want to feel bad when we spend money. So we will find any way to make ourselves feel better, whatever that may be. Alex, do you think if social media wasn't a thing, this trend would still be as big as it is? Or do you think people will rationalize their purchases to make themselves feel better anyway?
Honestly, I believe that social media has been the prime source for this trend. However, there will be a certain amount of freebie purchases that everyone will go through. Because I have also been doing this, now that I just got to college, going to the grocery store every now and then. I find that I do that a lot. So thank you, Liam, for your insight. And special thanks to Shavy Lieber from the Wall Street Journal for these statistics and interviews.
Thank you, Alex, for your valuable insight. Now, here's an interesting view I have found on ETFs. In this informative article by John Caesar of Go Banking Rate, we are going to talk about what to avoid if you're looking to invest in an ETF. For those of you who don't know, an ETF is an exchange-traded fund. These act much like mutual funds, holding usually a pooled specific index of assets. This article features David Ramsey, a well-respected CEO, YouTube sensation, and New York Times bestselling author within the business world. Dave explains his views on ETF and there's three main reasons why not to use them for investing. He provides his own insight and opinions, helping many succeed when investing. He strongly believes in a long-term hold strategy with an investment, allowing for the most growth. David's goal when telling people this info is to help them as much as possible, giving them the greatest chance to succeed within the stock market. John Caesar, and I quote, said this about David Ramsey. If there was one investment principle that Ramsey could be associated with, it's that investors shouldn't be timing the market. Moving on, personally, I'm currently in a Vanguard fund and a mutual fund, as well as a Roth IRA and a money market fund. The money market fund is specifically to help me earn interest on my savings. Are you guys in any investment indexes yourself? And if so, what strategies do you guys focus on?
I am personally invested into the Invesco QQQ ETF. And since I've been seeing consistent growth over the years with this fund, I've been consistently contributing a certain amount of money per month for this ETF. While the market has gone through ups and downs, I definitely just focus on the time value of money and that the market has continued to grow through many decades.
I'm also in a Roth IRA as of now, currently with Vanguard, primarily focused on indexing and passively compounding on my savings account, and just looking forward to riding the market.
Thank you guys for your input. Now here's some specifics I would like to highlight. The buy and hold strategy. This means He is very into holding a stock and getting the maximum gains out of creating a more stable portfolio for potential higher return value for the long term. Moving on, David's three main reasons. David cautions investors on ETF because they are easy to move in and out of, meaning you can buy or trade as many as you want during the day. Another reason, piggybacking off that, is that this will most likely start to expose the investors to short-term gains and make that a habit. Doing this will not compound the investment whatsoever, meaning there will not be much potential left for the money to be multiplied, and this will not happen. Lastly, turning your money over. Your money moving from stock to stock is not good. 99% of the time, the buyer will already be too late to the game, and the stock will already be going up or down. Next, I would like to highlight David's views on not just ETFs. Choosing an investment based on your risk tolerance and to let it ride. Despite what the market is doing, the best thing investors have on their side is time. And the earlier investors get and let their investment ride, the better outcome this will be. Lastly, David is not against ETFs. David does not think ETFs are bad. He just thinks that there's potential to use them in a bad way. And if you use them in a bad way, you are only hurting yourself. Buying and holding allows for less taxes, more compounding, and higher returns overall. What do you guys think about these tips?
I personally really enjoy this insight, Liam. I thought it was helpful finding more information on ETFs and investing as a whole.
Yeah, I agree. I like how you emphasize how you need to trust in your investment and just let it ride no matter how the market fluctuates. With that being said, we conclude our second episode of season 4. Thank you for listening. If you enjoyed the content, please share this podcast from Spotify or YouTube. Look out for your fellow Spartans and go green.
If you enjoyed the discussion, please like and share the podcast on Apple and Spotify. The Spartan Journal podcast is part of Michigan State University's Wealth Management Association, a student organization whose goal is to inspire the next generation of financial advisors. The Spartan Journal news team releases a newsletter every Monday morning comprised of financial literacy and the week's market updates. Feel free to follow us on social media at msuwma and check out our website at msuwma.com. Anything heard on either the MSUWMA or Spartan Journal podcasts is for educational purposes only and should not be considered as investment advice.